Hey, welcome to the Can I Borrow Your Car podcast. Today, I have a esteemed guest and a friend, but don't let the fact that he's my friend like lower your expectations or his reputation. That like assign all negativity to me because this guy's one of the safest drivers you ever meet. Bob Goldsmith. He's a newer friend, almost a year, but he is a close friend. I trust him implicitly, mainly because he makes investment banking both compelling and approachable. I have seen him in conversations with people. I'm thinking of that sports bar, people that are making millions of dollars, and then with people that are on their way up. And I found him to be approachable. I still sometimes am like, is really one of my best friends? Does he live in Manhattan? Because it sure didn't seem like it. I know I can see it over your shoulders. Like I could verify it, but like Bob, you really don't act like you're from Manhattan. I just wanted to
I've
share
been
that.
told that before.
Oh, good. Well, I mean,
With
it's
all due respect to my friends in Manhattan,
yeah. Well, I
and I've had it said about our firm too that
yeah, I mean, I run into in my industry, I run into quite a few people from Manhattan. And they tend to operate at, shall we say, pace.
well, I'll tell you what. If you're talking about different pace, I've got a brother in Boulder, Colorado, and he says the thing about people in Manhattan is, we think we're sort of on the leading edge of things and working so hard. And he always reminds me that if you find a good rock climber or fly fisherman, they'll have the same passion and devotion. He
Yeah.
uses a rock climber out there that, they'll spend their 14 hours a day trying to hone in on their skills.
That was when I was younger and lighter. Younger and lighter. Like fly fishing much more old guy friendly sport.
Yeah, well, my rock climbing career ended quickly when I just thought the rock was very cold against my face and the ground more sturdy. So I
Yeah.
hear you on that.
Well, cool. So, hey, tell everybody about Northern Edge and yourself. Just give them a little spiel about who Bob is.
Yeah, so a little bit of background. And Mike, I appreciate you having me on here. I've read your book. I'm a big fan of everything that you do. And we became very tight friends with a lot of mutual admiration really quickly. So I appreciated the things you said about me. I started this firm, Northern Edge Advisors, in 2006 with an eye to really bringing, I would say, bulge bracket quality banking to an underserved part of the market in two ways. One, the skills and expertise,
Mhm.
and really relationship banking to this part of the market. I was sort of the person you talked about being down to earth, but if you think about, I don't know if we all have very many neighbors that are making 1.5 million or 2 or 5 or million in EBITDA, but to me, when I looked at those businesses, or when I looked at that family or that entrepreneur, I thought, what a raging success story. But in investment banking, those were like crumb. And so I wanted, right? I had affinity for that, for those types of people, and recognized, and also being an entrepreneur myself, which is part of my background, I realized the amount of effort and skill that goes into doing that. A little bit of luck, and so I wanted to serve that part of the market. My own background, I started my career in foreign policy actually, back when being eclectic was sort of okay, and then I worked, had got an MBA, not important, but then I worked for many years in Europe in the commodity business, but also doing some corporate finance stuff, doing acquiring businesses for the company multinational that I worked for. Then I ran a business back in New York, 350 million revenue business, which was great because it really allows me to see things from both sides
Right.
of the table. And in starting this firm, I recognized that I wanted to hire bulge bracket bankers, people with real, what I would call execution skills to serve an underserved part of the market. And also, it was very clear to me also that there was a variation on the process. If you're selling a 2 billion company, which a number of my business partners have done in their careers, there may only be 7 or 8 buyers. But in this part of the market, there can be literally hundreds of buyers. And
Right.
Mike, I know you put likes on when I have a LinkedIn posting, but the last couple have been, buyer in Sweden, Indian client from India, business we sold to a German buyer. Those types of things. That is a result of running these broad, intense, extensive processes. My business partner was the COO of Goldman Sachs Investment Bank in Europe. He's also very down to earth. He did M&A there for years, and bankers at our firm MDs at GE Capital, Credit Suisse, and other great places. But like the thing that makes us very real is that we are working with real people and their families trying to solve problems. We're very long term. I'll jump into referrals for just a quick second. A lot of our referrals come from our former clients. It's where our best recommendations come from. A lot of our referrals come from attorneys. And I mentioned those two because clients, because it's experiential,
Yes.
right? They lived it. And attorneys, because they're looking for people that can unpack complexity. So we're often referred, this is a situation, we like it when we just get, this is a 6 million EBITDA company with a great family and no hair on it. And it's going to be very attractive in the market. That doesn't happen so often. We, we love those. It's just because businesses aren't that way. Life's not that way. But what we really often get calls on is there's a little bit of complexity in this business. The financing is going to be complex. There's odd management structure. There's a difference in opinion amongst the shareholders or amongst the family. We think the structuring will be complicated, and we know that you have the skills to work through that. Right now, we have about 40 professionals here. I'm in Manhattan, as you've made clear. We've got a fantastic group of people in Fort Worth, Texas. We have a fantastic, really amazing group in Toronto, Canada. I don't know if I should keep it up, but I do have a Canadian flag up, which is a little bit of, I'm an American, but that's a little bit of solidarity with our Canadian.
Yeah. So like I'm available to travel to those places if they need to have a slightly irrelevant or irreverent, either one, speaker. I like Toronto and I do like Fort Worth. But it's really interesting you said, before I get into the definitions, I get referred all the time to owners of very successful financial services firms. You and I have talked about it.
Yeah.
Almost always, more and more, I get asked, what do I think something's worth, right? And I'm like, well, I don't do valuations. I'm not an investment banker and I don't do it, but I like gift cards. I said to somebody, he tells me how much revenue he has. I said, what are they telling you? He's like, they're telling me 5X. I said, that's cool. Have they asked you what percentage of that revenue is subscription? Right. And he went, no. I said, okay. So I said, with love and respect, that's the first discount that's going to occur on your valuation. I said, you have to think about, and this is what you and I've talked about, so I'm crediting you for this, that panel discussion where, if you remember, you and Carl and Ed were talking, and I was the person that was like, no, we're not going to lunch. These three gentlemen are going to continue speaking and answering my questions, and all the rest of you can leave. Yeah, we're never doing that again. Next time you have 2 hours so I can ask you questions. But that's interesting because there's always hair. There's always something going on, because in my experience, the businesses that are perfect are often purchased before they're on the market. You know, they're
someone has an eye on them.
Yeah. You know, like one of my really good clients is being approached to do a roll up, right? They're going to peel these guys off of all these different firms, and they're going to make a big super RIA. And anyways, so let's get to this though. You ready?
Yeah, I'll pop in something on that. Just on valuation, because I react to it. Remember, valuation is people telling you what they think it's worth, and they have all kinds of motives and limitations in trying to tell you that. So what I tell business owners,
that's the nicest way to put that, by the way.
Yeah, price happens when we're in negotiating, with the elbows flying and trying to find out what a buyer's prepared to pay. We need to understand their motivations.
Yeah.
I'll give you something very basic thought. Every buyer ever only wanted to pay for the past, but they're always buying for the future. It's one of those idioms that you're like, oh, that makes sense. Well, yeah. They want to pay you for the past. Tell me what you did in the past, your financials, but they're buying for what you can do in the future. So there's room for negotiation on that. Number one. Number two, they don't walk into the room and tell you how desperately you want your business. But what they're going to do.
They don't do that?
They don't understand your business perfectly when they come in. So when people, be wary. I memean, it's good to ask a range. It's good to get some feedback. We often break out of the high end of a range with good reason, because we like the narrative. There was a buyer that had to have the business. When you talked about, tell me about your, subscription, recurring revenue, those are all the things that say, when someone says, well, you're going to trade between 6 and 9, and I don't know, the banker's here, saying 6, and I'm pretty sure that the business owner's hearing 9. The things that move you from 6 to 9 should be somewhat knowable, right? Like, it has to do with recurring revenue, right? Obvious stuff.
I'm not paying a multiple on emotion. I'll tell you that right now.
Yeah, yeah. Well, you got to, well, competitive bidding, put
Yeah.
people under pressure. Anyway, I
So,
sidetracked.
so that
Go
reminds
ahead.
me of something funny. So have you noticed how much PE money is coming into public accounting, CPAs?
Oh yeah,
And I was talking to a CPA. I said, "Do you
yeah,
understand why PE is buying up your firms?" And he goes, "Well, not really." I said, "It's because they've noticed that you're not running them well, and they are extraordinarily confident that they can get a whole bunch more revenue and profit out of your practice than you can."
yeah. Well,
I mean,
it's a big
arbitrage
land
is
grab.
real.
It's a big land grab. I was speaking to someone at one of the top 15, I think, accounting firms. They've hired 1,000 people in the last 5 years. They made 25 acquisitions. But the proof is in the pudding. The private equity groups are putting incredible amounts of leverage on those deals. So you have older partners that maybe are getting cash out. Younger partners are like,
Oh yeah,
boy, we're putting a lot of our cash flows going to interest payments. So,
yeah.
but they have to now. Now I get into these things, but there's the technology stack. There's
Oh yeah.
recruiting. Less CPAs are coming out. There's a lot of causes for it, but they can buy you for less and immediately have a higher multiple for their own, for
Yeah.
the consolidated business.
Yeah, and they're going to flip it. Like, I mean, they're just, anyways, it's like from the quicker fixer upper, right? Let's get into what is investment banking. So here's your question. You ready?
Yeah.
Within your market segment, which I want you to define a little bit more, like
Yeah.
kind of what is the Bob Goldsmith Northern Edge box? But within that market segment, how would you define what an investment banker is and is not?
Yep.
And then the next follow-up question, which you can just roll into if you wish, because they want to hear you and not me. The follow-up question is how do business owners and the financial advisors that influence those business owners, how do they pick the right investment banker versus an M&A versus a P?
Well, I mean, if they're picking P&E, it's probably going directly to P&E, which is not really suiting the owner, right? That would be right in the wheelhouse of the private equity group, which
Yeah.
is sort of proprietary origination. They want to knock on the door, call you from the pack, pay a low price. They probably won't mind an M&A advisor coming in later because at least because they can't avoid it if the owner's savvy or smart or reasonable. So private equity, it's just not great because you don't have competition. I mean, directly, they may be a good ultimate buyer. I think that, first of all, I mean, I'm not sure if this is in the question, but when a financial advisor is referring a business owner, number one, because I've seen a little bit of this in the industry of late, they should be referring to another broker dealer.
Yes.
I don't know if that's in the question, but I will.
I'll go there,
Can I run with it?
please.
Right.
Because
I just
you and I
boy,
share a observation about that.
right. So all of the good, and this is going to sound obnoxious, and I don't mean to offend anybody, but all of the really good M&A advisors I know work at registered groups. Right? It's because they come out of bigger platforms. The only reason not to be registered is because you sort of think you can get away with it, or it's expensive, or requires passing some pretty rigorous tests that people don't really feel like going through. Fundamentally, an M&A advisor, we're a boutique bank, which means we're the same as Goldman Sachs. We just don't provide the full array of
Mhm.
services. I would also say that their crumbs would be our gold, but
Hey, I like crumbs.
we do, we do receive business from them. So, um, uh, but the fundamental issue for a business owner via the financial planner is, you have a duty of care for that client. And so all the things that you're responsible for, best practices, best interest, right? That's a phrase that we use, record keeping, even anti-money laundering, all these sort of things that you do. How can you refer it to somebody that isn't responsible for best interest, good record keeping, and all those things?
Well, there's only one answer: ignorance.
Yeah, if it blows up, I mean, I think the compliance officers at one of these big places would really be astonished that any of this happened. So that's really not that's just not a good idea. The other thing is maybe I don't it goes a little bit to referrals, but we have an obligation to really understand who we're referring to, who the
Uh-huh.
recipient is, and doing a sort of due diligence, and so and understanding the skill set because uh, these are either a financial planner's existing client, so they're very, very precious cargo, or they're a potential client, in which case we can be very helpful because we are speaking at least the language of their industry, the language of their operations,
So critical.
have real insights into their needs. And I think we can reflect good on as a team with financial planners working in conjunction with them. But we're not a commodity service. And there are huge differences between the quality of work that is done between different boutique investment banks and M&A advisors. So, picking carefully, really getting to know the M&A advisors, understanding the work they've done for others. Do you want me to say what we do? Maybe, I don't know if the audience is sort of,
So, like, go ahead and give me a short, succinct, this is what a real, from Bob's perspective, investment banker is.
yeah,
So, people always think of Goldman Sachs, but that's really not what we're talking about. So, at your level, and you're successful, award winning, right?
yeah.
And you treat people the right way. But, like, what is an investment banker for you? How do you differentiate a real investment bank? So, I'm with you on regulations, by the way, 100%. Haven't had a 24. You know, I'm always amazed. I'm always amazed that,
You had the 24?
oh, yes, it was horrible. Like,
It was actually, that's actually, this is the test to basically be able to run an entire, run an investment bank. And it's
yes,
pretty,
yeah,
yeah.
it sucked.
Yeah.
I failed it by one question the first time and passed it by one question the second time.
Well, if you pass by one question, that's considered a perfect score. And
I know. Well, I was, so quick story, I was convinced I'd failed because, it's a randomized test. And so when I took it, Bob, the second time, I was like, oh my God, I failed it. How do I go back to my boss? How do I tell my wife? And so I spent 20 minutes just looking at the submit button, just 20. And I was praying and like gnashing my teeth, sweating. And finally, I was like, I have to hit submit. I hit submit and it said passed. And I was like, I yelled a very profoundly vile Irish expression.
yeah,
And everyone thought there was an active shooter.
yeah.
It's like all these poor doctors were submitting their boards and stuff, and everybody stood up and ran around the room because they thought. And then I got out of there, and so, anyways, long story short, I really. So this is from my perspective, and I'll just feed it back to you, right?
Yeah.
No one in the exit planning, and I'm not saying anybody's got bad intentions, but no one's talking about that particular issue, about the big difference between people that have been through a regulatory process
Yeah.
to ensure a better duty of care. And I'm just going to say that no one's talking about that.
Yeah.
And
It's like, it's about outcomes. And I think one of the issues is, you can get into these referral patterns and people tend to do it a little bit like herds. You have the
well,
popular
you hear about
personalities,
somebody, yeah,
but it matters. What we do matters. And so lower success rates and not what people spew out, but actual performance.
not
There's
every time
complexity.
works.
Yeah, there's complexity in the work that we do. There are the things that should work but don't work. There's just having seen it before. And there's also, I guess on the spectrum, you have on one end of the spectrum finders,
Mm-hmm.
right? Like I got someone that would be interested. I have people that would be interested, or they're listing agents or something of that nature. You even have within what I would call very reputable investment banks, just qualitative differences within advisors. Like that's inherent. We're very honed in on it. We're small enough that we can do that. And we have an organizational structure that we can do it. But you will hear stories about the the advisor sort of disappearing after the letter of intent. right? They sort of think it's over with a lawyer. I mean, really good advisors are negotiating down to the closing, business issues, commercial issues. There's a very well-known middle market law firm that refers to how, people at our group will reading the definitive agreement and commenting on their stuff, not as lawyers, but just saying, have you thought about this? Have you thought about that? This comma's in the wrong place. We're like, it's a qualitative difference. I'll tell you, at the start of a process, some clients don't need an NDA. It's really for their benefit. Nothing wrong with having an NDA. I've had situations where something is a totally silly, out of market NDA and we won't sign it. And they said, well, 3 of the advisory groups were signed it. And I said, well, they didn't read it. Like,
I read them.
do you want to work? It's great they didn't read it, but like they're not going to read the documentation that they're reading for you. This is
Right.
just, you're either a reader or you're not a reader.
Yeah. I have an expression. So my expression that I have used trying to get people to meet with you, it hasn't been successful so far, but it will be, because I'm not referring you a piece of crap, right? I don't refer friends stuff that I'm absolutely convinced is going to be a dumpster fire. But here's what I tell people. Like, I go, everything's okay up until the moment it's not, and then it's never okay again. When we're talking about 90% of your family's portfolio, when we're talking about that kind of concentration of wealth, and we're trying to get that wealth to transfer in one day with one execution, does it make sense that we should take every potential step necessary to mitigate risk? Like, and some people, and by the way, that's fine, right? They can go work with you. If you're a business owner or financial advisor, you can refer to anybody you want. I will tell you that if you're planning on being around for a while, there is an incredible power from a referral basis of having deeply held explanations about why your process is perhaps a little bit more incremental, methodical, right, than others. Because I love it when people are like, well, what do you mean I got to fill out this assessment before you work with me? I'm like, well, like, don't you do the same thing? Like, do you just quote people a price not without confidence that you can deliver value? I said, this is a favor from me to you. Like, my document that I sent out, my little fact finder, if you're good at what you do in sales, you'll be able to take that questionnaire, and no matter what happens, you can improve your sales just because of the questions.
Well, first of all, in our business, you just got to be down on the details.
Oh,
Like modeling financials, analyzing, and really creating a narrative about the business, but understanding where the fault lines are, the cohesiveness and coherence of the management team, concentration issues and how they can be mitigated, or, the sales forecasting. What does it look like? How is the owner going to be able to talk about the company? We're really on the sharp end of the spear, if you will, negotiating with buyers every day. So we, have real insights into.
That's all that counts, right? What someone else will pay.
Yeah. And telling a story about a business. Since we're talking about sales and marketing things, I see a lot of books, confidential information memorandum, which is the document that goes out once an NDA is in place. A lot of them are sort of feature based. They're, I've done my job, I've listened to you, and now I'm recording it on paper. I see some of them that give away information that never should be given away, even under NDA with a buyer. That's sort of an expertise issue. But also it's about benefits. Like, why do I care? There's a different way people say it, but like, why do I, like, this is why it's valuable. These are the things we do, but this is what makes it unique.
Well, it's like, so for example, my mom's house, like my mom just moved into an assisted living retirement facility. We picked her listing agent because her listing agent owns the neighborhood, right? She knows the neighborhood that my mom's house is in. She lives in the neighborhood. And she's got great success rate. We did pick one of the worst times to sell a house in recent memory. So, but that's just how it goes, right?
Like a lot of business owners, we only control timing so much.
But like, whenever I think of you, and I've used this expression, so hopefully it doesn't offend you too much, but I'm like, have you ever hired a listing agent to sell your house?
Yeah.
And people are like, well, yeah. And when they say, well, yeah, I'm like, okay, well, clearly it wasn't an amazing listing agent, because you can always tell if someone's had a real pro realtor. You can always tell, like, oh, yes, it was unbelievable. You won't believe, like, we thought we were only going to get X amount, and she was able to get us this. And then when you ask them, what was the story? The story wasn't the MLS listing. The story was the narrative around the experience of that home for someone
Yeah.
else, right?
Well, exactly. We're not locked into a neighborhood.
So, yes, your
A
neighborhood's a
usual
little bit
company
bigger.
in Montreal may be worth a different amount than a distribution company in New Orleans. And so we have a lot of flexibility and we have to do a lot of thinking around that. But since you brought up real estate brokers or listing agents, I think it was Freakonomics where they tell the difference between when they sell their own homes and they sell ours, they sell
I
theirs for
forgot.
10%. Because they get 100% of the extra $100,000 instead of 3 or 6%.
Right.
It has to do with integrity, but it also has to do with
Yeah.
motivations.
So a couple of things. How would you suggest? I mean, obviously, like call Bob, but other than you and Northern Edge, what are some suggestions you would say to people that are business owners or have influence over business owners, and at some point there's going to be a conversation of, hey, I'm thinking about selling this business.
Yeah,
Like, number one, what's the
yeah,
best way to introduce you in that moment, right? Is it that, like, hey, you need to talk to Bob right now? So it's kind of like a timeline of the exit process. Do we want to get you involved as early as possible? Do we want to wait till X date? But the second thing is what are some ways that people just hearing this podcast for the first time, maybe reading a companion article, what are some ways if they're like, oh crap, I didn't know what I didn't know? What are some
mm,
ways for these people to feel more confident about referring business owners to people like you?
yeah. I mean, I think that people should feel, there's a referral and then there's a conversation. I have a lot of just informal discussions. So for me, and it's one of the reasons why I think people should think about us early on. I'm not necessarily going to try to like sign up the client. I just want to give advice. And there's a real benefit to me in that. I can plant seed. I know what I'm doing, and it's not altruistic. And it's the same thing that Goldman Sachs does in some ways. They give a lot of free
Yeah.
advice. They do a
It's the
lot of
same thing
meetings.
I do. It's the same thing I do. Like if you own a financial services firm, I'm always available to talk to you no matter what.
Well, you're actually extremely generous, right? I mean, we've spent a lot of time. So and I've read your book, but you're very generous with the giving and the thinking about these issues. And if so, it, as I said, we're on the sort of the sharp end of the spear. We really know how buyers will evaluate a business. And so if we can have an informal discussion, the problem is a business owner thinks if they're speaking to us, maybe they think we're going to try to sell them, but it just seems like a very serious step.
Yeah, investment banker.
Well, and now I'm going to, now we're talking about selling my business. You're not. It's an informal discussion about what your options are. I may tell someone that they should, if they're highly concentrated, that they should mitigate that concentration. I'm very interested in knowing where they are in their own sort of journey about selling or not selling. I mean, I speaking of someone now who's 75 years old who absolutely loves what they do, is yes, I can talk about diversification, all those types of things. But the fact of the matter is that this person does not want to go fly fishing. We're going to work away so that like I can be helpful, but
Sure.
it's people. We're gonna be serious like about what the options are, or how the business can be improved, or what are some of the next steps, or if they should talk to Mike Garrison, or if they should. The basis of presentation of financial information is not helping them as a business. I don't do that work. We do a lot of modeling of numbers, but I may put it in that direction. Or if they say in a business that has, 6% profit margins, if they say they're going to grow it for another 3 years, uh, uh, or they're growing by 3% a year, let's just easier example, and they're going to grow by 15% over the next 3 years, and they spent the last hour complaining about the difficulties they're having with their management team, I'm going to say, that's great, but how is it all going to happen? I would rather sell a bigger, better business later than a smaller business now. Similarly, by the way, buyers would rather overpay for a good business than underpay for a problem. And so
100%.
So there's a lot that we can just do to be helpful about things they can do to fix to work on the business. If they're ready to sell now, that's fantastic. If it's a matter of doing it later, we'll point them in the direction. Like seriously, we can fix stuff. We can drill into the issues. We're really going to understand how private equity's really going to look at the concentration you have. If we can mitigate it, if you're working in different divisions, if it's a longstanding relationship, if there's technology tie-ups, if we think we can structure around it. We sold a company a few years ago that was 90% concentrated to, I think it may still be the biggest company in the world.
Holy moly.
Like that's a lot of concentration. On the other hand, they did something very valuable for that big company, and that relationship turned out to be very valuable for a couple of public company buyers. And we could structure around the fact that our clients were very confident they wouldn't lose that. And the buyers were very confident they wouldn't lose it, but they didn't want to, right? But there's certain risks that they couldn't take. And that plus a lot of cash at closing, right? Like made it all work out for a business that someone might have said, is not saleable. To bring it back to this, like we can give guidance on that.
Yeah. I mean,
and also going to something that that I read in your book, we're not one of the firms where there's 2,000 people, and there's certainly high integrity people there who know who's buttering their bread. But we want people who refer us to look good. We're grateful, and we collectively have a responsibility to give very honest advice, which people respond to very, very well. There's a tendency to sugarcoat things, and I'm sort of an optimistic person by nature, but we're gonna tell the facts to the owner and to the advisor.
So that's awesome. So much stuff in there. I guess, like, if I was going to summarize it, tell me if you agree.
Yeah.
Like, I think one of the biggest challenges that business owners and the associated advisors that serve them prior to the sale. So, like, there's a cadre of professionals that work and are very valuable in how do we build and grow and run this business well. There's another cadre of professionals, not better, but a different cadre, that get involved when we start talking about how do we transition this business with the best outcomes, right? And so the way that I position it is like, your business, if you're a business owner or you're a financial advisor with a successful business owner client, that is a limited edition Ferrari in your garage. Like, it is not a Toyota. It is an exotic car that you don't want a lot of mileage on.
Yep.
You don't want the Ferrari taken off road. You don't want it driven in rush hour. You have very specific things that you want to have happen with that car. And ironically, I think the worst outcomes that I see, I'm 3 years into this exit planning thing, but you and I've talked, I've owned businesses for 30 years, had some not good experiences exiting. All of them, we could argue, were my fault. But, like, fundamentally, I think the biggest problem that I see out for business owners and their advisors is not being able to, early on, as early as possible, set realistic expectations based upon an understanding of buyers and other players in the process, so that you can have an effective timeline, right? Because that's what the business owners ultimately need. They need to have somebody, I would argue, not like you, they need to have you, right? Or one of your people to come in there in a high trust environment without trying to get an agreement done, to say, all right, tell me what's going on, have the skill and expertise that doesn't take 25 hours, and then be able to say, hey, look, here's what I think we need to do, right? The situation's more critical than you realized. You have a unique window. I'm going to suggest that we consider working formally together right now because we need to get your company, we need to sell it now. And I'm
Yeah.
sure you run across situations like that. For most of the time, it's going to be, hey, I'm here to give you some ideas and some understanding of what this process is going to look like because people like me are the ones that find you the buyers and negotiate on your behalf. So like let's talk about whether we should remodel the kitchen or not.
Yeah, look, what I think is great for us, like with financial planners, is that
Yeah.
an example? Is again, we can drill into the business and answer questions and talk about their situation and be extra value added to the advice, right? It's collaborative value to the advice that the financial planner is giving. We can talk about market timing. We can talk about the business. We can talk about the options of waiting. We're starting now. But a lot of this, a lot of this comes down to me, it's expertise, but for a client, it's really trust. And for a
Yes.
financial planner, it's really trust. You also talk about that. And it's just, it's once you're in, there's a lot that we will do to just be helpful.
Mm-hmm.
But once we're in, what should a financial planner want? They should want the same exact thing as the owner. I mean, I know they want the money channeled back to them, but
Sure.
they should just put, like in evaluating, they should just pretend that they're the business owner. And like what I would say about us, I mean, this is, I guess it's a little bit promotional, but it's true. Like once we're engaged, we don't give up.
You know, I love it.
We're sitting on the same side of the table, and if stuff happens, like it's just we should be stuff happens. Like they lose a big client. They're the operations manager of the warehouse who's really running the business in Austin announces that he's going to leave in 6 months. Like there are things that happen, and you just don't want a fully transactional person who's like, this is just getting too hard, or I have to
Exactly.
wait.
Exactly.
Right. So when we sell a company 3 years after they engaged us, by the way, not charging them any additional like
Mm-hmm.
retainers and all that, whatever. But when we do that, we're very proud of it. So people say, how long does it take to sell a company? You have the people who say it takes 5 or 6 months, and they're not telling the truth. It sounds good to the owner, right? Right. I give a little bit longer timeline, and then I don't know if they hear me when I say, but when month 6 goes by and you're nowhere near the finish line, they're just going to say, well, the quality of the information you provided us wasn't great. It was late,
Yeah.
you
Blah
know,
blah blah.
blah, blah, blah. So,
No, it's really interesting because fundamentally, if I was being a real dick to a financial advisor about it, I'd say if you don't have your investment banker working with a business owner, who do you think that investment banker is working for? And it's not you.
yeah,
Like, and this is why so many, even at the big firms, this is why so many less touch, more traditional stockbrokery type advisors get really surprised when one of their clients that they've been buds with at the country club, and they're managing maybe 5 million, but they're like, oh, I can't wait till Bob sells. It's going to be 200 million coming over to me, and then all of a sudden Wells Fargo takes it,
for sure.
right? And they're
No,
like, how'd that happen? How'd that
yeah,
happen?
well, it's another thing you mentioned in your book, which is that we should, you know, we don't, uh, I mean, we don't mind it. We don't wine and dine business owners because it's like they're $40 million business. So it's not like, you know, do something nice for me and then I'll give you this
Yes,
contract.
sir.
It's like, it's too important for that. But we're very relational. And the situations that do work really well are is when we can get to know each other
Yeah,
outside, right? Having drinks for those who drink or non-alcoholic, whatever, or alcoholic, preferably.
yeah,
And
definitely.
get,
At
just
least
getting
with
to
you and me.
know. Yeah, because it takes a little bit of time to like really get to
Yeah.
know someone better, which is the other reason why I said at the beginning when we plant the seeds, it's because I know it takes. This is like one of the most important relationships. Remember, we're like very dear friends with lots of our former clients.
Well, yeah. How much,
We go out every year. It's like,
think about how much
you
money
know,
you made them.
and it's in a person's life. It's like such a milestone, and you go to battle together, and when you come out victorious, it's we all want to relive those special days.
Yeah. And the
where we
bad
got to work until 2 in the morning every night for 2 months.
and the bad ones live forever.
Well, my business partner always says he said something great to me several years ago, which was I was saying it was after a closing dinner, which are not always there are fewer closing dinners. It's unfortunate nowadays. But I said it's just great to see them, so happy. Like it's just the kind of people that you want to help, and it's a great feeling. He just made this comment. He said, you know, you, you stay in touch, but it's really 5 years after the deal closes when the dust settles
That you
that you
really
know
find
how
out.
stay. Like
Yeah. Yeah. So, well, sweet. So we got to land the plane on this because we, as you and I have proven many times, without a recording going, we can talk for a while. So
Can I do a quick thing to proselytize something I think is very important?
please,
Anytime
please.
I can talk to financial planners or business owners
Yes.
directly, just too often people think what we do, and I mentioned the expertise, but we think it's a quantitative thing because lots of people who are in this business are quantitative. In fact, I used to be told that you can teach a salesperson finance, but you can't teach a finance person sales. It turned out that that was not true. So your
Correct.
reaction, great, which is that I'm not sure you can teach either one that much, right, of the other skill. You just need to find people that are great at both. And
Yes.
really good investment bankers are not passive. They're not listing. They're aggressively going out. Good banks are out selling the business. As one of my former clients in Chicago puts it, it's the most important product sale of his life. It was just the sale of the business. That's number one. Number two, it's just because I like to get people psyched up about what really the other side of what we do. Number two, sell the future of the company. I mentioned people, they want to pay for the past. We're trying to project out into the future. We deserve our share of that. We insist on it. And
Yeah.
that's how we break out into higher multiples. Knowing why someone wants to buy your business. If it's just an investment, they'll pay less than if you've got the product that's going to fix all their problems or the service that plugs in just perfectly into what they do. Think outside the obvious. People have to get off. Bankers have to hustle. There's too many bankers that are going out to their 30 private equity friends or with some of the specialist firms just trading in information, right? They want to do the buy side for the buyer. And then, so they're selling your company. This is how it's always done. That's bull. Look outside of the obvious buyers. If we were selling a product for $50, a $50 check product on QVC, like we would know, I've been in the control room. Like you can see when things dip, it's like cut it and move on to the next thing, right? For one additional check, there's not much we should do. When you're selling something worth 30 or 50 or $200 million, there's nothing we wouldn't do. When someone says to me, like, that Swedish buyer, like, why would they be interested in this business? They haven't made an acquisition in North America in 15 years. Find 100 of them.
Yes.
And they frequently then they say, we don't know how you identified us, but this is awesome. We got
Yeah.
to change our board policy, whatever it is. Anyway, sorry, I don't mean to run us along,
No,
but that's my little thing.
it's perfect because, like, fundamentally, just landing the plane. The most important thing in sales is having safe drivers, right? When you really get down to it, it's being able to identify safe drivers, and usually the people in the greatest hurry are not the safest drivers,
That's awesome.
right? I mean, when you think about it, right? And so like people are like, I don't like referring to people that are late all the time, right? Because fundamentally that tells me that they're often in a hurry, which
Yeah.
and so once or twice is different, but I have some people that I've said to in the
You
past,
just you made me think of Malcolm Gladwell. There's usually like 7 little things that cause the crash.
100%, right?
Little things that matter.
Like, I mean, I've had people that didn't work with me because I used the word but too many times. And they're like, you're not confident. I'm like, you don't know me, but that's cool. I don't suffer from a lack of confidence.
Yeah. No, you don't. In a good way.
I said, what happened was I was trying to be too nice to you. And that's where I messed up.
Right.
So, real quick, this is the end of it, right? This has been amazing. There'll be a whole bunch of stuff, and I'll follow up with you, let you know
Yeah.
when this comes out. But, like, where can people find you? What's the best way for people to contact you?
Do we give phone numbers or
Uh, Up to you,
I'll give
100%.
you I'll give you an email, I'll give you a phone number. The email is too long, but B Goldsmith at northernedgeadvisors.com.
I'll have it in the show notes.
You'll have it in the show notes. My office number is 2. My assistant yells at me because I'm actually a pretty quick phone grabber, but you can get my assistant Robin,
Well,
who's awesome.
we're old sales guys, right? When you really get down to it, like, you know.
It's funny because one of my earliest observations on entrepreneurs was that when there's an issue that comes up, when I worked in a more corporate environment, when issues came up, I don't know, there would be a little bit more of a meeting,
Oh,
consideration, thinking it through. And one of my first observations on entrepreneurs many decades ago was like, they just grab the phone.
oh yeah,
Something's wrong. Like they're literally like, I'm going to take care of it. There is not a lot of,
not all that. So, well, hey man.
maybe I'm on myself on that.
So, are you coming to the Growth Drive Summit in Charleston?
You tell me to go and I will be there. No, I do want to go.
Yeah, it's in
It's our
October.
anniversary.
So this time, right? So this is a little bonus section for the people. Like, I'm now gonna tell Bob that he and I are gonna try and go out for a drink by ourselves. And what's inevitably going to happen is somebody's going to know either one of us, and we're going to end up having like
10 people.
8 to 10 people, which is why.
By the way, I love Growth Drive.
Yeah,
As you,
it's killing. It's killing. George is out at like a CPA thing right now. That's a big opportunity for us. That I'll tell you more about firm wise. But anyways, brother, love you. It's awesome talking to you.
too.
Thanks for
And
being
we're going for, so what I heard from this whole thing is we're going for drinks at Growth Drive.
Oh yeah, in Charleston, yes sir, very much so. But
Back in
we probably won't be successful doing it on our own. All right, well that ends the podcast.
Thank you, my friend. Talk to you.